Uh, well, as you know, when sell-offs start, you never know when they're going to finish. But we've already seen such a big reset that I think unless someone thinks the economy's turned and the bull market is peaking, and that's not our view, right? These are great entry points for people because you've got so many stocks down, and yesterday had the feel of get me out of everything, which has been part of this buyer strike. So, so the bottom line, Scott, is I think people have to look at this as a really attractive opportunity in 2022.
I'm pulling from a note that you guys had, and I think it was from your technical strategist, Newton. Retests look likely.
Yep, Newton.
Mark Newton. So, you're saying it's a buying opportunity, but some of your people, at least, are thinking that we're going to have retests, right? That this today is likely not the only one. I want to be clear on exactly, as we're telling people now's a buying opportunity, that it still could be turbulent moving forward.
That's right, Scott. Mark, for anyone who wants to use technical and buy entries, which is what Mark's trying to provide insights for, and someone who wants to find a tactical low, when you hit the bottom and everything from there, the selling is completed. According to Mark's work, we're not there yet. But for someone who's thinking about where the market is 6 months, 12 months from now, and that's really how active managers have to manage, right? Because they're not trying to necessarily catch the bottom, but they're trying to find good entry points. We're already down 10%, and many stocks are down more than 20%. And you've already seen it in the VIX spike, and we've seen it in the inversion of the VIX curve, and the percentage of stocks above the 200 is now around 50%. These are levels associated with an extremely oversold market. So to me, the one thing people have to remember is if they are participating in this buyer strike, the recovery can be violent. And then they're going to miss, potentially over 3 days, 5, 6, 7% gains. So I think to me, that's why I would say for those tactically minded, 6 months out, this is a great entry point.
So you're still sticking with your second half of the year could be good still for stocks, despite what we're feeling now, and there's a hangover to that, a hangover effect to that as well.
Yeah, if anything, I would say, because, we thought the first half would be tricky and that the highest probability of a 10% drawdown would take place in first half of 2022, but we're already here. So, I almost think now, we've priced in so much bad news that we're at the apex of that fear, and that means, for instance, the Fed meeting in March, it may end up being a big buying opportunity because we've already sold off so much.
Do you still feel, though, that if you look at certain areas of the market, I can easily make the case to you that there's still a lot of froth that needs to be worked out. Maybe not in the overall market, but certainly in the quadrant of the market that's already gotten hammered, and it's still not been down enough.
That's right. I would say the market feels fragile. But whenever things feel fragile and we think a lot of things are half empty, right, because we're fearful of the Fed and the geopolitical tensions plus inflation, that means we're pricing in a lot of bad news. And I think that's the perspective that's important to keep in mind, is that this doesn't mean to get out of stocks at all costs. This does mean first half is going to be treacherous, which it's proving to be, but this is going to be a great setup for a second half.
Give me your view lastly as well. It was notable as Bitcoin was the first to go green yesterday, then the overall market followed. What's the message, if anything, in that, and how do you expect crypto to trade from here?
Bitcoin, I think the sell-off that's been synchronized between crypto and equities shows that a lot of the new wallets are basically risk-on dollars, right, mainly U.S. accounts. And so crypto and equities are going to be sort of linked. But, is the Bitcoin narrative, broken? It's not, because, in some ways, Bitcoin's become a much more attractive project because so much of the mining's moved to the U.S. So the hash power now is basically a U.S. hash power. There's a lot more payment rails coming. And I think the adoption is continuing to grow. And really that's the key to Bitcoin is more wallets. So, it's been ugly. Crypto, is a hyper volatile asset class, and when the VIX is hitting 40, crypto is not going to have a good week. And so I think we're just seeing sort of the darkest of days now. But again, I don't think that's where we are in June.
Tom, you're a good man. I don't know where you are. I know it's somewhere good, but I appreciate you calling in and having this conversation with us, albeit a day late, but never a dollar short. Tom Lee, thank you. All right, that's Fundstrat's Tom Lee. Let's wrap it up.